Okay, hello and welcome everyone. Welcome to JFD Brokers Traders Tea Time with me, Darius Anucauskas. Today's the 6th of February 2019, so welcome everyone. Welcome to this Wednesday's afternoon session where we're going to have a look at the markets, a few charts, the usual stuff, guys. But before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, now then, guys, let's quickly jump into the charts. Now, the first one I want to touch on here is the Dow. Now, yesterday the Dow closed nicely in the positive territory. Looking at this 4-hour chart, of course, you can see that it ended the day around the 25,411. So that was the closing price for yesterday. So today, looking at the cash index of the Dow Jones Industrial Average, I mean, we can see that currently the index is kind of trading slightly lower, slightly below the yesterday's closing price. So if this is going to drag on for another 15 minutes, then we could see a slightly lower open here than the yesterday's close. So in a way, we could keep an eye on looking at that. It wouldn't spook the bulls, let's put it that way. So we are still trading above this downside resistance line taken from the high of the 3rd of October. So this is kind of seen still as a nice positive indication. Also, in addition to all that, we do have this upside tentative support line here. So in a way, you could consider continue monitoring this upside support line. So if we get a nice drop below this, then yep, we could start maybe aiming for a little bit lower here. The only thing is for us, let's say, to start considering much lower levels. Well, you probably understood now from looking at this chart, we need to see a nice good drop below this downside resistance line, and then of course we will target much lower levels. But for now, as long as we're kind of trading up, not only above this downside resistance line, but also above this upside tentative upside support line, we will continue targeting higher levels. So the next area that we're keeping a close eye on here is the next potential resistance area, of course, is the 25,555 zone, approximately there, marked here by the highs of the 30th of November. But to be honest, slightly above that, we do have the 25,800 level, and just a few points higher than that, we do have this little high here that we saw back on the 3rd of December, and that was approximately around the 25,970 zone. So keep your eyes on down. Certainly that's just a few points away from the psychological 26,000 level. But again, for now, guys, we're just going to go step by step. Initially, we will target the 25,555 zone. We'll see how it plays out around there. If it continues to push further up, yep, then we will target the 25,800 level. But if, let's say, this suddenly reverses back down here and drops below this upside support line, well, I mean, we could see maybe a further decline here, further correction, let's put it that way, because the correction still, we will see this as a correction as long as it remains above this downside resistance line. So keep your eyes down, have this idea in your head, and let's see how this plays out today. But again, like I said, we are still somewhat more positive than the negative on the near-term outlook. Jumping into another index, and this one is the dollar index. So looking at this picture overall here on the 4-hour chart, you can see that we're still below this in a way tentative downside resistance line taken from the highs of the 14th of December. We're not far from there, but certainly if this continues to push further up here, then this is where the index could get limited. Of course, like I said, if it fails to drive above this, then we could see maybe some bears kind of jumping in here and some sellers, and potentially maybe driving this one a little bit lower. You could in a way keep your eyes, from the very short term perspective, of course, keep your eyes on this little also somewhat of a tentative upside support line, guys. So you can see that it's certainly we did have a few undershoots here back on the 1st of February, but nevertheless still kind of looks quite nice and tidy. And basically, if we do see a drop below the 96.05 level approximately there, then yep, we could then aim for a little bit lower levels. Let me just put an arrow here for our future reference, guys. So basically, of course, a drop below the 96.05 could open the path towards slightly lower levels. Of course, there are some obstacles on the way, like the 95.92 zone. I was talking about this one in one of my previous videos, of course, but slightly lower than that, we do have some another good potential area here of support near the 95.80 zone. So 95.80 could be that little target to watch out for, but only if we're going to get a nice drop below the 96.05 level first. So, but for now, judging by the picture here, this little upside support line kind of remains intact for now. So in a way, we will target this downside resistance line first, and like I said, and if we do reach that line, this downside resistance line, then we will just probably take a more of a neutral stand for the time being, because we will just want to see how this is going to play out near these two lines. And if it wants to break through the upper, if we wants to break through the downside resistance line to the upside, then yep, we'll target, we will then aim for higher levels. But for now, like I said, for now, until we're kind of stuck in this little area here, certainly from the very short-term perspective, we are aiming for slightly higher levels here towards this downside resistance line. But also, like I said, don't forget that we could see maybe a break of this very short-term tentative upside support line. And if this, like I said, if this drops below the 96.05, then we will aim for slightly lower levels, at least for a little bit. Jumping into a few pairs now. So the Aussie dollar, so looking at this one here, certainly got a beating during the just in the first hours of the Asian morning and the first hours of the trading session, so Asian trading session. And you can see that I was talking about this one basically, just a quick reminder. Actually, I was talking about this this potential rising wedge formation here. Now, in a way, we did get a nice break here through the lower side of it, as according to all the textbooks, of course. But the only thing is that we didn't have many touches here. So in a way, many touches of this of these lines here. So in a way, we kind of got a quick break here. So we are aiming slightly lower, but for now we're just gonna play it short, and we're just gonna keep an eye on this 0.7880 level approximately there. This is gonna be the target for us right now, especially if this fails to get back above this upside support line, this one right here, taken from the lows of the 3rd of January. So if it fails to kind of drive above this, then yep, we will, like I said, we will target the 0.7080 level approximately there, which was the mark near the lows of the 24th of January. Good potential area of support, and then we'll just take it from there, see if it actually wants to break it or not. But for now, like I said, because it's a very tricky one, it did have a nice sell-off already this morning. If it, like I said, if it fails to drive back above this upside support line, then yep, we could see further declines. But if it suddenly, let's say, gets back above this upside support line, and even actually, if let's say the buying is going to be strong, and if it actually manages to get above the 200 EMA here shown in the 4-hour chart, then, well, I mean, this could be, or should I say, the downside could be slightly off the table, and we could see maybe this one traveling back up here towards these levels that were tested in the beginning of this week and last week as well. So for now, long story short, guys, at the moment the rate is sitting near the 0.7135. If this, like I said, if the pair fails to drive back above this upside support line, then yep, we could see maybe another leg of selling here, and we will then aim for the 0.7080 level here. So keep your eyes on that one. Jumping into GBP Aussie, now this is a very interesting pair, and I was covering this one last week, and basically I was telling, we were trading within this nice rising channel formation, and then we last week, of course, we saw this nice selling activity here in this pair. And what if we now extend actually this channel, we can see that the pair has rebounded from the lower bound of this rising channel and kind of rushed higher again. So so this weakness in the Aussie kind of really helped the pair to travel back up here. And of course, now we are testing this key area of resistance near the 181.90. So keep your eyes on that one. If we do get a nice push further up here, the next potential area of resistance that we're going to be keeping a close eye on is going to be the 1.8260 marked here by the low, near the lows of the 23rd of January. But of course, don't forget the fact that we could see maybe a bit of a correction here to the downside and then another push higher. So in a way, another quite interesting level to watch out for you guys here is this one right here, which is marking almost marking the tops here, and that area is around the 1.8105 level. So in a way, if we do see a nice push above the 181.90 level, this is, like I said, this is the level to watch. After that, the 182.60. If the rate fails to drive above it, we could see, like I said, a little bit of correction here back to the downside, maybe and actually going all the way lower below the 181.90 again. But this is, in that case, we will keep a close eye on this little 1.8105 level, because like I said, it previously acted as a good area of resistance here, but this time it could take the role of being a nice good area of support. And if the pair fails to kind of drive below this, then we could see maybe a nice rebound from it and a push higher. Of course, this is a bit of a long shot. This is just an idea here, guys. So for now, long story short, basically keep your eyes on the 181.05 level. A drop below this could lead the pair back down here, maybe even actually towards the test of this lower bound of the rising channel. But if we get a nice push further up here towards the above the 181.90 level, then keep your eyes on the 182.60 zone. Let's see how that plays out. For now, it seems that it does want to travel further up here, but we need that confirmation break above the 181.90 first. And the last pair I wanted to quickly touch on, and that's the euro dollar. Now, to be honest, not a lot of movement happening here today in the markets, and it's just a bit of a drag, let's put it that way. And looking at the euro here, yes, it is sliding lower. It continues to move lower below the 114 level. It's not far, we need to mention that it's not far from this tentative upside support line that we're still keeping a close eye on, even though we did have an undershoot here on the 24th of January. We had a break here lower, but then on the next day the pair quickly got back above this upside support line. So that's why we're just keeping this line for now here, and it's just something for us to kind of to see how this is performing. And even if we're going to get a nice drop below this upside support line, still there are some good potential areas of support here, like the 113.35 level, or even actually slightly lower than that, the 113.10 approximately there. So, but then again, guys, for these levels, of course, we need to see a break below this upside support line, this tentative upside support line. Don't forget that we could, in a way, actually see we could see a rebound from it as well. So that's why be very careful here. And in a way, what you could do, if you see this pair traveling further down here, in a way, don't rely much on this upside support line. What you could keep an eye on is this level right here around the 113.95 zone. So a nice good push back above this level here could potentially lead the pair back up here towards the, of course, the 114.33, or even slightly higher, the 114.50 level. But then again, like I said, guys, for now, we are not far from this upside support line. There could be a chance of seeing maybe a touch of that upside support line. But then the big question here is going to be: is this going to act as is this going to act basically as the rebounding area again, or actually we're going to see a break of it and a push further down. So for now it's a bit of a tricky one, but again, if you continue observing certain key levels here, then they might help you later on. So like I said, for the upside here, we need to see a nice good push above the 113.95 level again. For the downside, well, we will continue observing this upside support line, and if we do get a break below this, then we could see maybe a bit of a further decline here towards the 113.35. But in a way, if you want to start looking at something more of a longer term downside scenario, then we would need to wait until this drops below the 112.90 level, approximately there, guys. So approximately near the lows of the 24th of January. So, and only then we'll consider further declines. But for now, we're quite far away from there, and there are some good potential areas of support before that. So let's see how those are going to play out. Okay, guys, I hope you found it useful, and thank you very much for watching and listening. And if you want to join me tomorrow morning at my Traders Espresso, and that's 7 o'clock GMT time. But for now, I hope you have a wonderful evening. Bye-bye.